Should, yeah, now.
Yeah.
All right, awesome. Ready?
Okay.
In 3, 2, 1, go.
Hi everyone, welcome back to Infinity Wealth.
Third time lucky.
Oh my god. Okay, so listen, we've recorded videos, haven't we?
3 videos.
And first one was YouTube.
Yeah, this is the third one.
No, not today. I'm talking about we recorded 3 separate ones.
Okay. Yeah. That's what I mean.
We've been having a lot of IT issues, so
yeah, too many.
Yeah, complete. Anyway, welcome back. We are glad to have you, and it's an exciting time at the market, and also quite a dangerous time in the market at the moment as well. So I want to cover that with Kiki. We want to cover some of the Bitcoin, but also some of the other trades we want to cover basically.
Yeah.
And I think it's very, very important in what is going on. And then I'm also going to cover this book, which Kiki, did you just talk about books? Psychology of Money. Did you read it?
I've got it. I've brought it on the Kindle, on the audio book. I'll start listening to it because I'm finishing my previous book. So I do one book at a time. I can't do 2.
Okay, no, that's fine. So yeah, listen, guys. I always try and recommend books. One of them is Psychology of Money. I think it's a superb book. I wish I'd read it years ago. But the teachings of Infinity Wealth are all there as well. But it's also about money management, as in taking risks. And if anyone knows me, I take a lot of risks, and then I make it, and then I'll lose it again, and I don't want to do that. So, it's about that. It's a very good book. Please read it. It's Psychology of Money. I don't know if Kiki can put a link to it as well. And the other book that I think is important for property investors and stock market guys is this book. Now, Philip Anderson actually wrote this book, Secret Lights of Real Estate and Banking. I've had this on my shelf for a number of years, actually, and I never read it because it's quite a heavy book.
The size.
It's quite a heavy book. So I never read it, but I knew about, and it's about the 18-year property cycle. And I want to talk a little bit about that as well in this video. So I want to cover Bitcoin, I want to cover the stock market, I want to cover property, and also those 2 books. What would you like to cover, Kiki?
Yeah, I think the biggest part of it is especially chipping in on the stock market and crypto, and what should we be doing right now? Because I know a lot of people will be thinking some people might be shitting themselves and sort of trying to sell up. Other people might be looking for opportunities to buy, but what is it that we're doing in this market and what we're looking for? I think that will be insightful for everyone in this sort of moment of quote unquote panic, right? Which it seems to be. So I think that it's definitely
not panic yet.
Not yet, but the start of the panic.
Yeah. I mean, the other thing that we did, if you remember, we talked about gold, right? And you went into gold, right? And I talked about NASDAQ. 16,000, was it 16,400?
Yes.
And I said, short it there. Can you remember?
Yep.
Right. Where are we now?
Yeah.
14,000. Right. Yeah. It's going down even more because these are cycles as well, which Phil talks about as well. Yeah. But yeah, so let's get started. Really, I mean, one of the things that we did, what Kiki and I did, was we talked about the meta universe, right?
Yeah.
So Kiki, that video that we first did?
Yeah.
Right? We recorded that. What happened? Can you save any of that?
Yeah. So that's coming. So basically, we've got a segment coming, which you guys might find quite interesting. Me and Martin took some time out to check out one of the actual platforms of the meta universe called the Sandbox, and some of you might. If any of you, there's savvy guys there in our viewers, might have checked it out already. If you haven't, that will be uploaded. So obviously we had a bit of market chat in there. That's all old news now. So we'll snip that segment out, and then we'll release that for people to sort of explore that in terms of.
Yeah, that was in January. My God.
Yeah. Exactly.
And every time we record something, it seems to then have an issue with.
Yeah.
vocals or something. It's crazy. Yeah, so I think that would be really good if you can upload just that segment. I think that'd be really good because obviously January is come and gone now, so almost coming the end of February. But we also talked about meta-universe coins. So we talked about decentralized land, as well. These are all, one thing that you've got to remember with cryptos is that cryptos are all linked with each other, right? If Bitcoin is going down, and Bitcoin is actually the one that says it all, right? So if Bitcoin's going down, all the others are going down. It's not as if they're not going to be going down. The Bitcoin will pull it all down. Ethereum will do the same as well. Now, if you remember, I also said to you when it was 58,000, I sold all my Bitcoins and I sold all my cryptos. Can you remember?
Yeah.
Again, that was mainly due to actually the number of people that control this sort of thing as well. I was just getting uncomfortable because there's a lot of people that actually hold a lot of Bitcoin and they go on YouTube and they just bump it up all the time, I just want to tackle one of the arguments that they have, Kiki, is they always say, well, crypto is a safe haven. It's not a safe haven. It's never been a safe haven. Gold is a safe haven. You can see it. When the Russia crisis was announced, you saw what gold did. What did Bitcoin do? It went straight down. Yeah, Bitcoin is a risk asset and will always be linked to the stock market. Nothing to do about safe haven. If it was a safe haven, it would have shown its hand right now in this period. It would have completely shown its hand by saying, well, actually, I am a safe haven. Everyone rushed to me. Everyone didn't rush to Bitcoin. They all rushed to gold, right? Yeah. They rushed to gold. They rushed to oil. They rushed to commodities that were inflationally linked, but Bitcoin didn't have a say in it at all. It's therefore always should be classified not as a safe haven. It's part of the stock market. It's a risk asset. So as a risk asset, as the stock market goes up and down, it will go up and down. You make your own conclusions on whether you think it's a commodity, whether it's like the .com bubble, up to you. But there is a lot of hype, and that's what happens in a bubble. There is a lot of hype, but in a bubble, what you have to be good at is just riding that bubble, and then getting off the bubble, and then just watching it collapse, basically, or shorting it if you are that way inclined. So just with crypto, should I share some charts, Kiki, or should we do that?
Definitely. Whilst you're getting the charts up, I also wanted to say it's whatever investment vehicle you're in, right? Whether you're whatever you're investing in, you need to know the crucial points of regardless of whether it's in a bubble or not, and regardless whether you think it's in a bubble, I think it's a bubble or not. The basic principle of whenever you're investing, you need to know when to get in and you need to know when to get out. Full stop. So even if, for example, you could have been investing in oil and you bought it at the high price before that crash happened, before we saw even the negative prices in oil, you could have lost all your money there. But you need to know when to get in and when to get out. Simple as that. It doesn't matter. So it doesn't matter what you're investing in, whether it's metaverse, whether it's stocks, actual company stocks, whether it's products for your own business, you need to know when to get in and when to get out. Full stop. Period. So that's the only thing.
There's times of high risk periods, right? And there's times of that you should actually be in the stock market, right?
Yeah, exactly.
And the drivers of this are actually, we teach it in our courses as well. The drivers of this are actually volatility, looking at the volatility index as well, looking at what the dollar is doing. There's a number of factors that are out there that you need to continually monitor to see what they're doing. And then, of course, the charts will also tell it all, right? Yeah. The charts can never predict the future. The future is really predicted by using a little bit of your intuition and also the data that's going. And remember, the data that they always give you is always backward looking, right? So to give you a classic example, do you remember oil? I had actually said to you, buy oil. Can you remember? I said, buy BP, buy BP. Right? BP was £1.80, right? BP is now it actually hit over £4. I don't know if it's come back a little bit.
Yeah.
Right. Now what I'm saying to you is, be careful. That ride is almost over.
Yeah.
Right? That ride is almost over. Why is that ride almost over? And everyone is worried about inflation. Everyone's worried about inflation. Everyone's worried about Russia. If we go, let's just look into the charts. Is that right?
Yeah, go for it. Let's see your screen.
Hopefully, yeah. Okay, so we've got Tesla up there. I'm going to move you, Kiki. Can you see the chart? Yeah.
Yep, can see it. Perfect.
Okay, so let's. Okay, so. Well, where should we start? Should we start at the Nasdaq first?
Yep.
Okay, so if you look at the Nasdaq, so this is a shorter term chart, monthly, but going back to a year basically, so a year's chart. If you look at a 5-year chart on the Nasdaq.
Yeah.
Okay, so I said to you here. Do you remember? I said to you here.
Yeah.
Sell it if it hits, and it was going to spike. This is what it's doing. Sell it. You can see that the slower moving average is beginning to tip down.
Yeah. Yeah.
If you're only on the buy side, so if you look at all the moving averages, it does not mean to say that this thing will not bounce. It will bounce.
Exactly.
You're in a period of very high volatility. Can you remember what it did here? And up here, we said to you, it's going to come back. It touches this long-term moving average.
Yeah.
Yeah. It's more likely to come and test its longer-term moving average, basically.
Yeah.
Yeah. If you look at all time, right, you can see how far overextended that is.
Yeah, exactly.
Yeah, you can see how far overextended it is. This is the dot-com bubble, right? This is the dot-com bubble. I know it's microscopic. I wish you could expand this, but you can't, right? But it's microscopic compared to what happened.
Exactly.
It paced out for how long? And then it went back down again.
Yeah.
Yeah. So whether we're again with the moving averages, it could easily go back to 12,000.
Mm-hmm.
Right? There are, there's various things pointing to a 12,000 correction on the Nasdaq.
Mm-hmm.
Whether that will happen straight away or not, I don't know.
Yeah.
15,000 is definitely on the cards. You can see where all the support levels are basically.
Yeah.
On the Nasdaq. So if you're a trader, that's great. It's been a great trading environment. You need to be in and out. But the other thing is there's no swing trading in this.
Yeah.
Actually be sit on your screens.
Exactly.
Because you're catching the extremes.
Exactly.
You really need to be on the screens all the time. Yeah.
100%.
The E-mini, it's the same. Now, the S&P 500, if anyone knows the S&P 500, it's made up of, it's not just tech that makes it up. Tech makes up quite a bit, but it's financials, oil, and that's why it's held up. But, this is cracking. If this starts to crack, then you have to say, well, actually, the tech has already taken quite a bit of a beating. It hasn't made much of an impact on the S&P 500. Hasn't even tested the 50. Sorry, let's go back. Hold on.
Yeah.
Has not even tested well, it has actually on this one, right? But it's not, from its prior high, it's not that far off.
Yeah.
Right? It's not in bear market territory, but it has more to go. So what's going to take that down? You're looking at yields rising, but there'll be a stage where yields are going to start to drop. And the banking ones, and I think energy, that will start taking it on the chin a little bit.
Mm-hmm.
Right?
Mm-hmm.
The reason why energy is, if you go back to, let's see what oil is. Sure. Yeah.
Yeah.
Okay. So if we go back again to crude oil, right? If you go back to crude oil and go to all time.
Yeah.
Do you remember 2008?
Yeah.
That was a huge spike.
Yeah.
1990, huge spike.
Yeah.
So where's the dot-com bubble? 2000, oil was rising really high.
Yeah.
Oil is overextended at the moment.
Yeah.
When you look at it on the chart perspective, it's overextended. It's overextended from the shorter term 10-day moving average.
Yeah.
No, that's a 5-day moving average, right? It needs to come back. It needs to come back. So there'll be some sort of correction in oil, and then may resume an uptrend. But I also think that we're getting to a stage with oil that, you know, the economies are beginning to slow. Everyone's worried about inflation. So inflation is rising and it won't go away. Don't get me wrong, it won't go away.
Yeah.
But what will happen is that we're almost approaching peak inflation. You've got really high oil prices, really high natural gas prices, high copper prices, everything else. Looking indicators. So when you start looking in March, April, you'll start to see that it's actually coming down.
Yeah.
Yeah. And then that will have an effect on the bond yields, which will then start coming down as well. And that means that no, the yield curve is flattening.
Yeah.
Something else that everyone looks at is a yield curve, just to train our people out there, right? Is actually, so you get a 2-year bond, a 5-year bond, a 10-year bond, and a 30-year bond, right? An inversion of a bond yield means that the shorter term bonds, so let's say the 2-year, it's like you getting a fixed term mortgage, right?
Yeah.
So the fixed term mortgage is at a higher rate than the long term mortgage.
Yeah.
Right? Should be the other way around. It's an inversion. It's showing that we're expecting some sort of recession.
Yeah.
Yeah. So the yield curve, when it starts to flatten out, and that, I think that will be the next panic. The next panic will be actually growth is slowing. Yeah, it is slowing because everyone who wanted to buy the iPhones, they got free money from the government. There's no free money flowing. Right? Cost of living is going up. I don't know if you looked at, you know, my petrol cost is absolutely mind-boggling, especially all the driving that I do. You know, with oil being up high, food prices being high, energy costs being really high, how much is the consumer going to have to spend on other items? Is he going to reduce it or is he going to increase it? Bear in mind, the government are not there to give you free money anymore.
Yeah.
So what do you think that's going to do? That's going to slow the economy down, isn't it? And all of a sudden, these guys are in a panic. Oh, we're slowing down, which we can already see. And this is what's going to be happening. Unless the Federal Reserve comes in and says, actually, no, hang on, they're not getting rid of QE or at the moment, but the Federal Reserve will come in and say, well, actually, no, we're gonna carry on pumping QE, right? So that's something that you have to be very, very wary of. So crude, I think, you know, they talked about 100. They kept talking about 100. Look, it never reached it. When they start talking about these big numbers, it never reaches it. No, everyone piles in, FOMO's in, and they never reach it, right? So that's NEO. We talked about NEO. Apple, right? You look at Apple and how far Apple is, basically.
Yeah.
This full-time chart of Apple.
Yeah.
Yeah. Are people going to go out, buy more iPhones? And Apple is a widely held stock.
Yeah.
This will be the one that causes, if you see a crash happening, it will be starting here first. Because this is, people buying iPhones, going out buying iPhones, but they're not getting any more government subsidies. Price of food's going up. So who's going to go out and buy iPhones and all the services? Which is why tech is beginning to slow down. And in a highly inflation environment, tech does slow down.
Yeah.
So if you look at, if you look at a 5-year chart, you can see it beginning to slow down again, right? There you go. So that's a year chart. It's going to come there. I can see that. It's going to probably come lower, right? And as Apple goes, the market will go. I'm not saying sell your Apple stock or anything else like that. What we're trying to say to you is, if you're not in the market at the moment, don't buy. Don't buy. Nothing is a bargain. Things can get cheaper. Nothing is a bargain. What you need to look out for is telltale signs of basing with the market. Because you're not a trader. Unless you're a trader, that's fine, because then you're in and out the market. So you've got BP, right? So you remember, BP went to 420. If you remember, I said to you up here, during the height of the crisis. Yeah, it went to 180, I think it was.
Yeah, it did.
There you go.
It was around 180.
That's what I called it. Remember, I said to you, it pays a hefty dividend. This is a high earning stock, you know.
Yeah.
It's going to make money, you know. Now again so it's closed that gap. Yeah, but it's beginning to reverse. So there may be, with oil coming in as well, there may be a short-term correction, especially with the FTSE 100 as well. Rolls-Royce, listen, the problem is a lot of people bumped into Rolls-Royce. He's got debt.
Yeah.
When interest rates are rising, what do you think happens to companies with a lot of debt?
Yeah.
Yeah. The house builders are having a little bit of a tough time, which is understandable. We've put interest rates up twice.
Yeah.
That from house builders. House builders are not the place to be. I'll tell you the place to be. Right. Let's bookmark this. Remember I said to you, go to the pharmaceuticals. Go to Glaxo.
Yeah.
And Glaxo. Can you remember?
Yeah.
Yeah. Have I got it here? Hold on. All right, here we go.
Yeah, GSK.
All right, here you go. I'm not, don't forget, don't follow our tips or anything else like that, right?
It's been added on the right. That's it. Go scroll right to the bottom of the list.
This one, yeah.
Yeah, and you'll see it there.
There you go. Right. So let's look at long-term GSK. Done hardly anything. Done hardly anything.
Yeah.
Right. A lot of people buy this sort of stock. If you remember, I said to you buy at 1200.
Yeah.
Pays a huge dividend. With all the crap that's going on, sometimes in life you have to actually, a lot of people have jumped, and forgive me, right, but a lot of people have jumped onto crypto and have created cryptos and coins, and they're trying to make it big by not actually doing any work, right? You need to do a little bit of work here. Things like this sort of thing will stay test of time, basically, unless there's a lawsuit or something like that and someone's suing someone because they've poisoned a lot of people. But if you look at what's been going on, right, it's a constant, it's an up and down. So let's say with SmithKline, you say, okay, well, when it gets to 180, I'll get off the boat. When it comes back here, I'll buy it. It's been in that patch for how many years? So it's done nothing. So this is not the type of stock that you buy and hold. This is the type of stock that you keep, and it pays you a dividend at the end of the day. It does pay you a dividend. So if you look at it on a yearly basis, right, you can see it went up to, look how high it went.
Yeah.
Now it's on the way down because everything is being pulled down, and it is going to be pulled down.
Yeah.
Right? So pharmaceuticals are a place to be as well, but they will go down along with everything else, basically.
Yeah,
right? 100, again, doing the same sort of thing. And we covered Bitcoin.
Yeah.
We did Bitcoin, yeah?
No, we haven't looked at Bitcoin yet.
Right. So let's Bitcoin. Where is Bitcoin?
Right at the top, right at the top. Scroll right to the top. It's right on top of your list.
You sure?
I think so. Oh no, scroll back, scroll down. Yeah, it's the yellow icon.
So if we look at Bitcoin, Bitcoin US dollar, right? So I know that a lot of people are into cryptos and everything else, right? So if you look at the all-time, look at where it is now. Yeah, when I said to you, sell it because everyone's just getting too bullish. Now Bitcoin is widely held by a number of people.
Yeah.
5-year chart. You can see that Bitcoin's coming down. Look at it now. Bitcoin will come back down. If it breaks, I think it will retest the 30,000, no problem. It will do a little bounce off that, then it will go straight down. I think it's going down to 20. That's where I think it's going. Right, that's where I think it's going. Yeah, everyone's going to say, well, it's a double top, right? If it breaks that, don't forget, because that is a head. That's the
key area.
The other thing is, if it goes back up, you could create a head and shoulders.
Yeah.
And then that's longer term. It's going to go down. So it very much depends on what's going on. But at the moment, you know, I would not be a buyer of Bitcoin. If you are interested in Bitcoin, I would not be a buyer in Bitcoin. You know, I ride it. That's it. I'm not interested in it unless it shows the right patterns again. Then it's fine. But Bitcoin is sentiment driven, right? It's not a safe haven. So where's the gold? Where did we have gold? Let's see if we can find gold. So that was Kiki went into all gold. Kiki? Yeah, you went into gold, didn't you? So yeah. Went into gold, and we talked about gold before, if you remember.
Yeah.
Said to you, seasonally, gold is very strong now. So what will happen to gold here is it may experience a slight pullback. Yeah, may experience a slight pullback. Otherwise, it's climbing.
Yeah.
Otherwise, if it gets back to this level and breaks that level, it's going.
All-time highs.
Right? It's going. So this is the contrast between Bitcoin and gold. You know, they always say that, oh, Bitcoin is a safe haven, blah, blah, blah. It's not. A safe haven, this is how a safe haven would react. Right? A safe haven would react like this. As the market is coming down, people are getting worried. Actually, it's probably topping out here for a short time.
Yeah.
Gold. But that's okay. It's a long-termer, right?
Yeah.
So those are the charts. Anything else that you think I need to cover, Kiki?
I think so. They're the main lot. The main lot of them. Obviously, the stocks are following very similar suits. You've covered the S&Ps as well, so it's not like there's nothing drastic happening in any particular stocks. So we know what's happening.
Yeah. So I would say to you guys, right? I'm going to unshare it now. Let's have a. Let's go back to that and unshare. Yeah.
There we go.
Yeah, so you know, with the market, you know, it's important as an investor. You know, a lot of people. It's not like property. Yeah. It's not like property. When it's down in the dumps, you can keep it for long term, and it doesn't matter if it goes up and down. You're getting a dividend.
Yeah.
Yeah. But one of the things that I want to talk about is this book as well, right? So it's The Secret Life of Real Estate and Banking. It's an Australian guy. English Australian guy, who basically wrote this book in 2008 with the financial crisis and everything else, and then he worked out that there was a pattern in the stock market and also in the property market, and he called it the 18-year cycle. Some people have heard of the 18-year cycle, but the 18-year cycle composes of a 14-year up and a 4-year down. Right. So when I read it, and I have been in contact with this guy, by the way. So when I read it, I thought it should be starting from 2008, right? Yeah. The down should be starting 2008. His belief is the down should start in 2012. Right. Which is really weird because I was buying property in 2012. It was down and it was beginning to go up, which is why my gut tells me it was then. But his calculations are it was 2012, and I think it's 2009. So if you go by his calculations, then what you're saying is that we're in what he was saying is we're in a mid-cycle slowdown at the moment. We're in a mid-cycle slowdown, and then what will happen is there'll be a re-acceleration up to the upside. Now, if that is true, the telltale signs to look out for would be the Federal Reserve. Let's say the NASDAQ, the S&P dropped 20%. Right? They dropped 20%. All of a sudden, Federal Reserve go, oh, we've worked really hard. What are we going to do? They'll come in and they'll go, actually, no. Because I don't think, the market is pricing in 7 interest hikes. There's 2 problems, which is where the Federal Reserve and the Bank of England are just totally screwed over. Right? How they're screwed over is if you owe someone money, Kiki, would you put your own interest rates up if you can control it? And pay the person more money?
Yeah, exactly.
No, you wouldn't, would you?
Exactly.
Right? But it's not the Federal Reserve that control it. It's actually the market that controls it. Yeah. Right? But if the Federal Reserve, with their vocal staff, they try and control it, right? But let's say with interest rates going, they're pricing in 8 interest rates hikes, and I believe that interest rates should have been a lot higher before any. As a property investor. So I think we're just opening ourselves up to a lot of pain later on.
Yeah.
A lot of pain later on for everyone. So let's say if we go back, we take out interest rate hikes, right? So instead of doing, let's say they do 2 interest rate hikes, right? They do a 50%, 50 basis point, another 50 basis points, so they take it to 1 point something, right? All of a sudden, the market is tanking, right? They could then come back and say, well, actually, we're going to walk it back. We're not going to, no, we'll manage it a little bit less now. Right? Inflation is coming down. So my gut tells me that this panic about inflation will go away. They'll be worried about a stagflation, basically.
Yeah.
There's no growth going on, and inflation is just going up.
Yeah.
But underlying inflation will always be on the rise. I think they're in between a rock and a hard place. So let's say they do come back, and looking at cycles, looking at everything else, just on the stock market side, right? You always have the slowdown, and this year also, the important thing to remember is it's a presidential cycle. So they're doing the midterm elections, stuff like that.
Yeah.
Market's always volatile there because market doesn't know who's going to be in power. Else.
Yeah.
It generally tends to follow a pattern where in the first 3 months it goes down, then in the next 3 months it still goes down a bit and then picks up again towards the end. Then it's summer, it rises, and then there's again a big steep back down and then rise towards the end. So, stick with the channel. We will tell you when to get in and how we're getting in. Kiki's all in gold. Right? In gold. I sold all the crypto. I don't own any crypto because I decided, that's not right. I'm going to wait because rather than losing money, because it's harder to actually, if you lose 30% of your wealth, that wealth now, that stock or whatever it is, needs to go up more than 30% to make back your original amount. Right? So, sometimes it's better just to bite on the bullet and just say that's it, I won't look at it until I think it starts basing. When it starts basing, that's okay. The next boom, if Phil is right, and we're going to experience another quick cycle up, could be Meta Universe, right? Could be. I'm just guessing, right? Could be. I haven't got a crystal ball, but I'm looking out at stuff like that, right?
Yeah, fair. It's interesting because completely we have different sort of, I wouldn't say strategies, but different approaches. So for me, the way I looked at crypto is I put that in and I just leave it sort of kind of thing. But I was saying to, my stock is the one that I've shuffled. So it's like with my, it's weird that I have, not weird, but there's a reason behind me doing it this way. Yeah. But with stocks, you'd think that actually stocks I will keep for long term, but actually for me, I'm keeping my crypto for long term because obviously we'll see again, we're scratching services and whatnot, etc. But with stock, it's okay, I see what's happened. Nvidia, Disney, all these great investments that I made, sold them at the high. I knew when to sell, right? Sold them, sat down, re-looked at it, and then in December decided to put a huge chunk into gold. And now recently in January, when we were speaking, completely reshuffled most of my stock portfolio to only predominantly gold. I've got a few stock I've got some stocks of some other companies, but I've just left them there for other reasons, and maybe a bit more medium term. I've got a bit belief in the business, but majority 90% of my funds that I've got all in gold, basically.
Okay, so listen, it's interesting what you brought up, right? So I've just got a quick question for you. I mean, we did a discussion about Meta Universe, can you remember? And I told you about my kids, right? Yeah. Because one of the things that, over Christmas, we did a video, unfortunately, it didn't work, it didn't render, and I didn't have time, and Kiki didn't have time. But one of the questions that we did in that video was, my kids, I said to my kids, hey, kids, what about the Meta Universe?
That video released, by the way, it was the other video that I didn't release. That
one did release?
Yeah.
That one did release, okay, that's good. Right, but again, so let's go back to crypto. So I won't cover that again. Yep. So let's go back to crypto. Okay, so a lot of people believe in the longer term aspect of crypto.
Yes.
That it's a store of value.
Yeah. Okay. Yeah.
No. This is what the everyone has been saying.
Yeah, store of value. Yeah.
don't worry, it's going to 5 million. It's going to, the dollar is going to be shit. It's going to go to 5 million. It's going to go to 20 million. You will be billionaires. No, who's going to be the billionaires? And the guys who've mined it in the beginning are sitting on it because they paid nothing for it, and they're out there pumping it like nobody's business. And then they're dumping it slowly. Those are the guys that are rich.
So here's where this lies, right? And this is what my belief has always been. So with cryptos, and the reason why I say every week or week in, week out, we are only scratching the surface. If you read this, I've got a book here upstairs called Blockchain Technology. If you read that book, right, you understand the use case of the blockchain technology and cryptocurrency, right? Obviously, if you're looking and investing in coins which are that will have use cases in the future to come, right? And
can I stop it? It's interesting, right? If it's okay, if it's all right with you, okay. So you were saying I agree with you with blockchain technology, 100%. 100%. It's going to be adopted by a lot of other things, right? Okay, so that's blockchain. Coin. Coin. How is that linked?
So just how I'll explain. So just how you value a stock in a company, right, is the same way you would value a coin for a company. Because apart from Bitcoin and Ethereum, you look at every other coin, you are essentially investing in that value of that business. So Solana, right? Look at Ripple, for example, XRP, where that came from, the origins. You look at so many other, they are businesses, they are companies, they are technologies based on the blockchain. You are investing in their part of the technology. In a way of investing in it, you are taking their coins. So
are you now saying that coins are like shares?
So this is the 2%, the two understandings, right? So you've got a side, people are just in it for a run. They just want to make their money. That's the people that will put their money in, they'll get burnt, they'll get out. Simple. They'll lose money. And that's completely wrong mentality, right? Or there's people that will understand. So like for me, for example, the seven, 8 coins that I'm invested in, I understand the companies, I read their papers, I understand where they're going, I know what they're doing, I know what their technology is, what their technology is based off of. I've then gone and purchased their coins. I've invested in their coins because of that reason. And that for me is the long term. That's the difference. The reason why we are where we are at the moment, and it's completely disillusional to say crypto safe haven, because it's not. It completely isn't. Yes, it's very similar to the stock market, the way the stock markets work. So like you said, there will be stocks out there that are performing well. Nvidia sold so much, but that doesn't mean what their stock price is. It's what the market sentiment is. Same thing with crypto at the moment, right? It's what the market sentiment is. You're always going to have gold, silver, things that are tangible, that are going to be the safe havens, no question. However, the perception of that, so forget all these 5 million and all the moon to them. These are just memes online, right? These are just people. Look at this from a logical business investment perspective, right? You are simply taking a company, right? You're taking what the company's providing you, i.e. in the stock world, it's shares, in the crypto world, it's coins. You're invested in that as an invested interest, as an investor, and you're saying, hey, I'm with you in the long run because I believe in your business technology.
All right. So what value does it have?
What value does the coin?
So how can you? There is no, like a share has a tangible value, right? That company produces profits. All the ones that I know.
Same as crypto companies will produce profits because their technologies will sell. Companies will use their technologies. The whole point is that I don't think this is what people are not grasping properly. Blockchain technology and Web 3.0 is what is happening and as the next thing. So it's like me arguing in 2000 and saying, what is the value of an internet company, internet stock? You tell me. What business? No one buys anything online. No one transacts anything in 2000. So we're sitting in the same place right now and saying, what's the point of metaverse? What's the point of blockchain technology? What's the point of these cryptocurrencies? Because what's the point of these companies? Because they're not doing anything. There's no store of value. But that's because of the time we're sitting is still 20, 30 years ahead of us, right? That's the difference. So it's within the person's perception whether you want to believe in this or not. That's up to you. And I think this is where the big contrast is between the younger generation and the older generation, because we can sit on for another 50 years if we wanted to, right? We've got that time to be able to sit on it. And we've got that time and money, whether it's to waste or whether it's to invest. At the end of the day, we're looking at the next things. We don't like half of the stuff that's happening in the stock world, so people want the decentralized. Well, now whether or not people, like, as I said, there's people out there that are saying moon this, moon that, moon this, and we got Dogecoin and all these kind of stuff. I understand, I get that, but the same patterns were in the .com. You know, you had every
I'm just going to play devil's advocate just for a minute. Just for a minute, all right? And that minute is going to be this. Okay. First of all, when you look at crypto, right? Crypto was hailed as a currency and how you can transact and pay other people, and it's a payment form. Do you remember? Payment form. It's brilliant. Or Ripple can come in and you don't need to go through banks anymore. You can pay people in Ripple and so it's a transaction. You can do this. It's gone out the window. Right? Okay. No, hold on. That went out the window. That whole idea just blew itself up. Right?
Why has it gone out the window?
Next one was.
Why has that gone out the window? From what reason? Because you still can do that till this day.
No, you can still do that. But what I'm saying to you is, let's say if I owe you 100 quid, right? Yeah. And you said, that's fine, Marttand, just pay me in Ripple. That's fine. Yeah. Okay, so I need to buy Ripple. But by the time I sent that Ripple to you or whatever coin it is, that value is so volatile, it will not be worth 100 back to you again.
That's completely fine. I get that. That's a completely valid point. But the point is that where you're at the point of the market, you're making that statement is as I said, we're scratching the surface. So if I said exactly the same thing, I'm taking it back to 2000s because you were in that period, right? If I said to you, Martin, join my startup, we're a internet business. You say, what the hell is that, Kiki? I explain that to you. Say, look, I'm going to give you 20% shares in my business. No, let's hold on. Hear me out. I'm going to give you 20% shares in my business, worth X amount today. Would you know in 5-10 years what that will be worth? That will be completely nil, right? Because maybe the internet businesses didn't boom and go off. That's an investment risk. That's just normal, okay. So, right? But hold on one second. Let me finish this point. Now, the internet, you've seen what the internet is. What the internet started off as, what those little things, whatever it was initially.
I know, I was there.
Email communication, right? And so you're saying, so email communication versus just currency as what crypto is. Now, the internet is way more than email communication now, and cryptos and blockchain is way more than just currency transactions, at least now for what we know. But that doesn't mean we stop here. We're not stopping here. That's what I'm saying. So I'm not trying to say where you're coming from is incorrect, but what I'm trying to say is there whether you believe it or not,
that's a good point. A good point that you've made. Yeah. It is. Listen, I like that. I do like that point.
Yeah.
That is a good point that you've made, right? But when you go back to, let's say, the .com bubble. Because let's say Solana or Ethereum or something like that, right? It's actually the blockchain and you're using Ethereum in that blockchain to transact. So Ethereum, you could use Ethereum to buy NFTs. You can only use Ethereum to buy NFTs.
So you can use, there's a few coins now that do NFTs. Solana as well is one of them, but
yeah, right. But they're doing NFTs, right? So my question is this: in that, don't forget, having lived through the .com bubble.
Yeah.
I'll tell you a story. I can't even remember what stock it was. I invested £1,000 in an ISA. I remember, and I put it in this stock. And I just forgot about it. And next thing in the .com bubble, I was thinking, bloody hell, it's worth 10 grand.
Yeah.
Right.
Yeah.
And I didn't sell it. Kiki, I didn't sell it. This is where experience comes into it now. Didn't sell it. I thought that's fantastic. And it went down, and I lost everything, right? It went down. The company went into nothing, basically. Right? Right now, there are a lot of companies that produce nothing, basically.
Yeah.
So with the coins, my only thing with the coins that I don't like is that the coins are controlled by a few individuals, and then the rest of us have to go out and buy it, right? But they're controlled by a few individuals who first mine it. But also behind that are individuals who've done it before, so they've got quite a few, right? They've mined it, then they're promoting it.
That's same as companies and stocks, though. The same as companies and stock. You buy Tesla stock.
I agree.
You buy Tesla stock,
I agree.
Elon Musk controls how much you own. He can tomorrow, decide to do another.
I
See what he done. So it's the same thing.
I agree.
Yeah.
So, I mean, just going back to the applications, right?
Yeah.
Going back to the applications, I think you're right in the respect of you don't know what the applications are going to be. You cannot determine, but no one is saying, and especially me, I'm not saying blockchain is here to stay. It will have new technologies associated with it. In the dot-com bubble, you had a lot of companies that were formed. 90% of them have gone to the wall. They don't exist.
Mm-hmm.
They don't exist.
Mm-hmm.
So a classic example is, I'm not going to bring up the charts. If you look at Cisco Systems, right? Cisco Systems were the cornerstone of the internet, right?
Yeah.
They've never gone back to where they used to be before, right?
Yeah.
They've never gone back, but internet is here, right?
Yeah.
Because that was the hype, right?
Yeah.
So for me, it's controlled by a few individuals who are self-promoting in order to get their money out, basically, or the money up, right?
Yeah.
That's one thing. Okay. That's one of the major things that I don't like about crypto. Right?
Yeah.
Let it control. We, the people, should be controlling shit, right?
Yeah.
Not by some idiot who's a billionaire who's actually gone out and bought all these coins and all of a sudden is getting all the crowd worked up and then selling them. It's pumping and dumping. I'm not interested in it.
That's what I'm saying. Stocks, the stocks are in the same place right now.
Yeah, they are. They are. Listen, they are. I mean, a classic example, but I'm not talking about those stocks. I'm talking about stocks that produce a tangible asset. They produce tangible goods that are sold. The goods and services by that company are sold. They're transacted with. They make money off it. Yes, they make profits some months, they make losses other months, but they're transacting it, and there's value. There's tangible value there, right? Yeah. There is. They've got intellectual property, right, in producing whatever goods that they've got and stuff like that. Yeah, crypto's not like that. Yeah, crypto is the value is beholden onto the guy who's buying it and selling it and in that environment. It's not. I've produced this calculator, let's say.
But Martin, that changed ages ago. We're in the digital world, right? That's the whole point. Like everything we do, like now, a lot of the stuff isn't tangible, right? Things we see, your money in your bank account is not tangible. It's not actually there.
No. But I'm not talking about. I'm talking about in comparison when you make a comparison to shares, let's say. Comparisons to shares, basically.
Yeah.
That's what I'm saying. It can't be compared to shares, right? And the other thing is, when you talk about shares, the recent stock market. Do you remember Cathie Wood?
Yeah.
Can you remember? Long live Cathie Wood. What did I say about Cathie Wood?
Yeah.
What did I say about Cathie Wood last year in sort of like April time? I said this woman was going to be completely destroyed.
Yeah.
Why? Because she started investing in these out and out. And the dot-com bubble, Kiki, you weren't there. Dot-com bubble is exactly the same. What they were doing was they were putting, this can happen, and people are investing in it, right? The company is still not producing, if you go to Dragon's Den, right? You go to Dragon's Den and pretend we're dragons, right? Someone walks through and goes, I want £500,000 and I'm going to develop this thing, right? And I'm going to produce this. Do you think a dragon like Peter Jones or any of the dragons would say, oh yeah, mate, have my £500,000, here you go.
Okay.
You know how you get on.
I tell you what, Stephen Bartlett would, because he's already got his own Web3 metaverse company.
Yeah. But listen, he is, so I'm saying that's slightly different. I'm not saying, what I'm saying is that they invest in stuff that's already making a profit. Yeah. So when companies are, if it's a pharmaceutical company, they're investing in drugs that haven't been produced yet, right? They haven't been produced yet. So they are hoping and pinning, and everyone's looking at all the data, saying it's going to be approved by the FDA and it's blah, blah, right? So, yes, some shares are like that as well. So I'm not saying all shares, but there are other things that are just pumped up for no reason at all, right? Cathie Woods' ARK Invest is down 50%.
Yeah.
It's down more. It's down more. Don't think about it, because it was blown up by this cash flow. So now you've got a lot of people who are naturally, who've been brought in, and they've looked at the stock market and they've said, stocks only go up. They don't. Yeah, stocks don't only go up; they go down.
Okay, so what I want to do is I want to bring this back because I think we're going. So just bring it back to the point that we initially started on. So this is the way I think we'll summarize this because we're getting to an hour now.
Yeah. Okay. Yeah.
Sorry, mate. So no, it's good. This is good. This is good conversation because this is organic. This is what is needed in order for us to really take it to the next level. So this is really good. So this is the way I see it. The way I summarize it in my head is the blockchain technology is here to stay, right? The cryptocurrencies are part of the blockchain technology. If people are accepting that the blockchain technology is here to stay, you can't pay for things on the blockchain technology with British pounds and US dollars or Japanese yen. Simple, full stop. You can pay for things on the blockchain technology with cryptocurrencies, full stop. So because the blockchain technology right now isn't in full force implementation, because we haven't got when the day will be when JP Morgan puts all their client data onto the blockchain. That is an example. Once JP Morgan and big companies start putting their data,
so does that mean they produce a JP Morgan coin then?
Well, that's up to them. That's completely up to them. I don't know what they do, but just to continue there. Until people start putting their data, if you read that book, Blockchain, and by the way, I recommend everyone to read that because it'll give so much.
Have you got it handy, Kiki?
No, it's in the flat. I'm at my parents' house today, so it's not with me here. So I'll post it in the link. Blockchain revolution, right? It talks about how your whole centralized data, your whole data, decentralized, controlled by yourself. So almost you have this little profile. Imagine a profile. You can hand that profile over to anyone. It will tell you everything about you, right? And obviously you give access to people what they need access to, like your app and phone would. So
it's like buying houses, that it will create an easier transaction.
There you go. So the solicitors process, which takes 6 months on average, will take 2 weeks because everything is there. The whole store of files there. Now it's an amazing life, and that would make life easier, but we're far away from that yet. So my summary of this, and again, just being conscious of time here, is blockchain technology is here, is the next thing. Web 3.0 is the next thing. Metaverse is the next thing. All these are new technologies which we are starting to see. Some of us are scared, some of us are researching, some of us are learning, and some of us are figuring out how this actually can be used for the positive, right? Now, if that is here to stay, none of these technologies, again, as I'm repeating myself, none of these technologies that I've just mentioned will be accepting British pounds and because the very companies they are developed by, and that's just the acceptance of life right now, because right now businesses have more money than governments in a certain sense, right? In the way our industries are run at the moment. And that's not our argument. That's, if you want to take up the banks, why they're printing so much money, that's their problem. But the point is, that is the infrastructure. It's the people with the money that are always going to talk, because they're the guys that provide us with the products and services we have at the end of the day, the guys with the money, right? So if blockchain is here to stay, it's going to be cryptocurrencies that are the one that are going to be thriving. And the reason why that is simply is because of the fiat is never going to be accepted onto that. Now, obviously, there's a transition period, which I don't know, may take 20 years, where fiat is still a thing and it needs to be exchanged, or people need to start transferring. Now, I don't know whether there's going to be two different worlds which are colliding with each other, people on the fiat side and people on the side of the digital side. But the data and the statistics tell me that most of the people that you even look into that are in cryptos and cryptocurrency and blockchain are obviously the younger generations, below 40s, less than 50s. And if there's any older investors, billionaires, they are being advised by younger people. So this is obviously the technology of the next sort of generation. Now, whether other people want to believe in it or invest in it or not, that's completely up to them. That's the simple way I see it. Blockchain is here to stay, and what is going to be on the blockchain is going to be cryptocurrency. So that's where I see my value. So that's why my investment on that is simply I buy the coin and I not forget I got the coin, but I just leave it there. Stocks is the one that I shuffle around, basically.
Okay.
So, yeah.
Just to help your argument.
Right? Yeah. Go for it.
Google, right? Okay. Just to help your argument.
Yeah.
Okay? So Google, if anyone looks at the chart of 2000, right?
Yeah.
You look at Amazon, right? Classic one, right? You look at Google, you look at Amazon. When Amazon first came out, it was just a bookstore. They were selling books.
Yeah.
Right?
Yeah.
Everyone thought, what the hell? hell's going on here? You know, Google came out and went, search, you know. No one thought about paid advertising or stuff like that.
Yeah.
During the dot-com bubble, that's still not to say that there won't be a crash, right?
Yeah.
During the dot-com bubble, these things went down tons, right?
Yeah.
70%, lost 70%, 8% of their value, right? But there were businesses that were there, lasted a longer time.
Mm-hmm.
Yeah, they came back. You look at Amazon, you look at Google. Just to support your argument on that thing, because yes, not everything went down, but the vast majority of the things, you know, just demolished themselves, right? But the few other bits stayed. Now, whether that's going to be the same in crypto or not, I don't know. I don't have a crystal ball. What I would like to do is, you know, carry on always having conversation with Kiki, seeing what's coming on, and that's why we both went into the meta universe, right?
Yeah.
Because I thought, I can see that. I can see what's going on. I can see that. But then, you know, I bought it 25% more than you did.
Yeah.
I bought it because I couldn't buy it on that day. And then all of a sudden it went down. I looked at Bitcoin. I started to do calculations. I thought, I can always buy it back again. I don't need to hold it. But why am I holding it? I can always buy it again, which is why I sold it. Right? I thought, well, it's always there. I can always buy it back. It's not as if it's going to zoom up to $1 million, you know, and then I'll be regretting it. I don't know. So it's just there to buy. But the argument about future technologies, I think, yes, what will help that argument would be looking at companies like Amazon, looking at companies like Google. Facebook is completely different. But then you look at the crux of it all, and then you look at Cisco systems and people like that. But Amazon of these worlds developed it because they brought in other items to sell, basically.
Yeah.
So you could be right, Kiki. Let's say but I'm not sure. I'm still not. I'll be honest with you. I'd like to keep an open mind as an investor.
Yeah.
I definitely like to keep an open mind. Although I do have views,
yeah.
I still want to keep an open mind because there could be an opportunity that I could be missing.
Yeah.
Right? And sometimes not having an open mind has cost me a lot of money.
Yeah.
It has cost me a lot of money. And I'm trying to actually do that now, learn more and keep an open mind. Right, so we hope you've enjoyed it.
Sounds good. Being good.
One thing that we didn't cover, just before we go, we've got, I'll be doing talks with Finico Bank, basically, which we covered in the video, which we couldn't release. So Finico Bank have asked me and Rakesh to do a weekly market update on a Thursday. So we'll be doing that, and that'll be on their own Finico platform. So Finico Bank, if no one knows, it's a very large Italian bank. And Rakesh, my friend, who's also a trader, has asked me to join him and do a webcast with him on that. But I've also asked Rakesh to come and join me because the main thing is Kiki is working as well as me. Sometimes he doesn't get the time. So we will be doing recordings, me and Rakesh, maybe when Kiki can't make it, but we'd like to introduce him into that system as well. You know?
Yeah.
And yes, please like and share. I mean, I know we've been pants in uploading these videos. We really need to do better. Really.
I was gonna say it'll be awesome getting another mind as well in.
He believes in. It's funny. He believed in crypto. He hated crypto.
Yeah.
About 9 months ago.
Yeah.
And I spoke to him again. What do you reckon? He went, yeah, it's accepted. I went, really? I went, I'm going the other way now.
Yeah, no, it'll be great. I mean, like, I was saying to you, Martin, having a trader's mind as well, someone who's been a professional trader as well.
Yeah.
I think that will really bring in.
He was actually on Traders Magazine, so he was on the front cover of Traders Magazine.
Amazing.
Yeah. Listen, that's all he does, right? Yeah. I do property, and I do stocks and shares, but I do property. Yeah. He just does property. Stocks and shares. So the profits that he makes out of stocks and shares, he then goes and buys property.
Yeah, exactly.
But he is consistently full on every day. Yeah. But like right now, he's not trading. He doesn't want to trade. He's long only, mainly a long only. So.
Yeah. Awesome. Sounds good. So guys, remember to
thank you very much. Yes.
Like, share, and subscribe. And please, again, like you've done before as well, let us know any particular topics, anything anything that you want us to discuss. I mean, this conversation that me and Marttand had today is great because it really digs into why, what is the reason behind this kind of stuff, and it tests whether the stuff where we're putting our money and where we're, we are in this. We're not just talking about these things. We are in these markets. We're not just people that are just reading some theory and sharing the theory. We are in and invested. Obviously, there is loads of things that go on, and it's so good that we can share these experiences. And I'm excited to have the third mind on as well with Rakesh. So keep in touch, keep in tune, and yeah, just smash that like button, share it to a friend, any friend that you might think it find this valuable. So yeah, all good.
Okay, right. Bye, everyone.
Awesome. Take care and have a great weekend. The rest of the weekend, this will be released on a Sunday evening. And if recharge for the next weekend, and we'll see you soon.
Yeah.
Take care.